What happened in 2008? How did the crisis that shook the world and affected millions of people actually happen? In this video, we will examine the real reasons behind it. You won't believe how humanity's purest instincts created such massive disasters. Companies laid off thousands of employees. On television, everyone was saying the same thing. The financial system is collapsing. But the most frightening part was this. This crisis did not start because of a war. It did not start because of a pandemic. Oil did not run out. Everything started simply because ordinary people were buying houses. Yes, you heard right. Just because people were buying homes, the world experienced an economic crisis whose effects would be felt for years. So how did the global economy almost completely collapse because of a few mortgage loans? And more importantly, could the same thing happen again today? And the real question is this: was it really that simple? In the early 2000s, the American economy looked incredibly strong. House prices kept rising. People could easily get loans. Banks were handing out mortgages to almost everyone. Low income? Oh, not a problem at all. As long as you wanted to buy a house with credit. Already in debt? Don't worry, you'll pay it off. At worst, you could just sell the house you bought and pay all your debts anyway. After all, prices keep rising forever, right? People were buying houses, then selling them later for a higher price. And they were feeling richer and richer. The system looked perfect, but in reality, a massive financial bubble was quietly growing. While ordinary people were doing all this, Wall Street was doing something extremely dangerous in the background. Banks package people's mortgage debts together and turn those debts into investment products. Can you believe that? Your debt to a financial institution was being transformed into an investment asset. And what's even more interesting is that people were being told how safe these products were. A complete tragic comedy. They called these products MBSS and CDOs. For ordinary people like us, they sound complicated and terrifying, don't they? But the logic of the system was simple. The home debts of people living in the United States were being sold to the world. That meant investors all around the globe were actually investing in the debt of the American people. And the system kept telling everyone the same thing. Don't worry, everything is under control. We talked about this in our previous videos too. Almost exactly 80 years earlier, authorities had also said that everything was under control, right? How familiar those words sound. But in reality, this system had one major weakness. Loans were being given to people who should never have received them in the first place. And because everyone was making money, nobody saw it as a problem. After all, what was the worst that could happen? And eventually, the massive bubble burst. In 2006, interest rates started rising, and that meant one thing: stop taking more loans. As interest rates increased, loan repayments began slowing down in a chain reaction. Housing prices became stagnant and even started falling. The system could no longer handle more pressure, and it had started moving to protect itself. Imagine this. Suddenly, millions of people could no longer pay their debts. People started losing their homes. Foreclosures spread everywhere. A complete nightmare scenario. And as all of this was happening, house values kept falling. But the real disaster was only beginning, because the investment products sold by the banks also started losing their value. In reality, they were nothing more than garbage. And the thing nobody knew was this: who was holding how much garbage? You know, the economy is often psychology, and fear had already started spreading. Then came 2008. The measures taken to prevent this day from happening had not been enough, and one of the world's largest investment banks collapsed, Lehman Brothers. Just think about it. A bank with balance sheets larger than the economies of countries where millions of people lived had failed. At that moment, everyone around the world realized something. This was no longer just a housing crisis happening in the United States. This was a global financial crisis. Stock markets crashed. Companies collapsed. Millions of people lost their jobs. Some lost their entire savings. Some became homeless. Some went bankrupt overnight. The modern financial system was about to face one of the greatest tests in its history. From individual lives to corporate structures, millions, even billions, of lives would be negatively affected by this crisis. The modern economy was actually built on one thing: trust. People trusted banks. Banks trusted each other. Investors trusted the system. But the moment trust disappeared, everything stopped. The circulation of money suddenly came to a halt, and everyone tried to exit the system at the same time. This showed us that even the world's largest financial institutions could collapse within just a few days. When massive financial institutions collapsed, the American government and the central bank stepped in to save the system. Interest rates were lowered to almost zero. Trillions of dollars were injected into the market. Massive bailout packages were announced. Because the government knew this. If the system completely collapsed, the consequences could be as severe as the Great Depression. These actions taken by the government slowed the panic, but the damage was enormous. Trillions of dollars in wealth had disappeared. The biggest lesson of the 2008 crisis was this: the economy is not just about money. The economy is a matter of trust. As long as people believe the system works, everything appears normal. But the moment trust disappears, fear and panic spread instantly. And perhaps the most frightening question is this: did 2008 really end? Or is the world making the same mistakes again? Financial crises do not begin suddenly. They grow silently. Easy money, debt, greed. What do you think about this topic? Share your comments. If you found it interesting, don't forget to like and subscribe.